If you're watching this, then you're probably some sort of trader right now, and you've probably heard many times that you need a trading plan in order to succeed. Now that is true, but do you know how to make one? In this video we're going to go through every single thing you need to put in your trading plan to keep it simple and effective at the same time. I hope you get a ton of value from it, because that is the main aim of this video. You should have a heading which is a trading plan, or your name and a trading plan, and make it big and bold. I've actually got one right here. So every time I trade in the morning, I can see the trading plan big and bold. Add a quote. It says, "To be consistently profitable, you must approach trading as a probability game. Focus on making trades that have a statistical edge and let the probabilities work in your favor." Mark Douglas. Pairs, session, and exit criteria. So pairs, what are you trading? Trading euro dollar, trading cable, trading gold, trading SPX, or the Nasdaq, whatever you're trading. Put that in there, and then we're going to see the session. What session are we trading in? London session, New York session, Asian session. London and New York are the main ones. Asian is pretty much a consolidation most of the times, but whatever session you're trading, make sure to note that down, and then that'll help you not deviate. So let's say you trade London, you put down your trading plan. Now let's say you don't get a trade in London session. Now you're not going to be trading New York, are you? Because your trading plan says only London session. So why would I trade New York? So it keeps you accountable, and that's why having it right in front of you is really good. Next, exit criteria. What sort of things would need to happen in your trade to make you exit? So for me personally, to make me exit a trade, a major news event has to be there like in the next 10 minutes. 1:30 is when most news events happen, which is 8:30 in New York. If it's around 1:20, I'm removing the trade no matter what. That's my exit criteria. Maybe for you it's something different, like if you see a wick rejection of a liquidity area, you take the trade off. Whatever, that's up to you and that's in your plan, but make sure to have an exit criteria, as this is very useful, very crucial once again. So risk management. How much are you going to risk per trade? What's your risk to reward ratio going to be? Is that going to change? Is it going to vary? Is it fixed? Those sort of things. Are you going to take partials? Are you going to risk more because you're in the last week of your prop firm challenge? Are you going to risk less because it's a personal account? Those sort of things. So in my trading plan, I've actually got risk on personal account, risk on a no time limit challenge, risk on a time limit challenge, and my risk to reward, which is a fixed 1 to 2R currently. So make sure to have all of that noted down so you know exactly how much you're going to risk per trade, and also how many trades you can take per day. Maybe it's 2. Maybe if you only want to do 1% overall, you can take 2 trades of 0.5 each, or just 1 trade risking a full 1%. So make sure to have these things on check and in your trading plan. So now let's move on. Analysis. So this will depend on your strategy, but as a quick little message, if you're enjoying the video so far and it's getting you some value, then make sure to click the like button, and it really helps out the channel and helps me make more content just like this. Thanks a lot guys, I really appreciate it. But essentially, what time frames are you trading on and how are you going to analyze on each of those time frames? Okay, so hopefully you guys understand that. Next, confluences. So it's pretty self-explanatory, but if you don't know, then what sort of things do you need to enter a trade? Just things to add to make your trade higher probability. So for example, tapping into an order block is a confluence. Tapping into a fair value gap is a confluence. Sweeping liquidity, showing weakness is a confluence. All these things are like boosts in a way, in order to make your trade more convincing and more likely to go in your favor. Obviously, even if it's got all the confluences, it's not going to be 100% right. However, stacking more confluences is always going to make your trade higher probability, and you know, it's better to take that risk rather than just take a risk with no confluences, and which is probably a low probability trade anyway. And also what I've done in my trading plan is include musts and confluences. So confluence 1, 2, and 3, those sort of things, and musts that I need to see. So for example, in my personal strategy, I need to see a liquidity sweep at 2 a.m. I need to see the Asian low or the Asian high get taken, otherwise I'm not going to enter a trade. So these are musts, and these are like, I need these. If they're not in the trade, I'm not taking the trade. Simple. This is actually what's going to build that discipline in order to take you to the next level. Entry criteria. So entry criteria, this is pretty much when you've found your confluences, you've done your top-down analysis, all of that stuff, and now it's time to actually execute. But what are you looking for? This could be things like weakness, wick rejections. This could be a break of structure. This could be a break of structure with displacement. This could be a order block after a break of structure. All these sort of things is your entry criteria. So like, it's sort of like a checklist. So tick, tick, tick. If all of these criteria is met, I'm going to enter the trade. If 2 out of 3 are met, I'm not going to enter the trade. Simple. Have your trading plan right in front of you. Next, we have a setup quality. So after you've backtested a year's minimum worth of data, you will find the setups that tend to produce winners compared to the setups that tend to produce losers. These are high probability and low probability setups. I've actually done a video on this covering how to find them, all those sort of things. So the way I've done it right now is A plus, A, B and C setups, C being a very low probability, ones I should not take. B is basically valid. A and A plus are really strong and high probability. And after each of these setups, just note down what you need to see. For example, A plus setup, London sweep, corrective price action, strong displacement, fair value gap mixed with an order block. Whereas a C setup, a very low probability setup, would be trades after the London session. No sweep of liquidity at the open of London. No weakness shown, so no wick rejections, things like that. Now let's get on to things to note. So this is basically the last one. So the more you backtest and the more you take these trades, follow your trading plan. However, in your trading journal, always note down that could I have gone break even here, could I have taken partials here, all those sort of things. It's all about learning. I mean, losing trades are nothing but a learning opportunity, so take it like that. Always note, win, loss, whatever, it's always a learning opportunity. So if you didn't take a trade, take notes of the session, what happened, what did we do, and just keep improving, honestly. Guys, that's the end of the video. I hope I didn't take too much of your time, but I hope this was very useful for you and you can take this into your own trading plan and get some trading success. That's enough from my side. As usual, I'll see you guys next week. Happy trading, stay safe, and yeah,